Hello all. Today I'm going to talk to you about the Greer Financial Toolkit and how you can use it to your advantage to determine if a company is a good time to accumulate. Is it in a good zone, buy zone, what I call it? And also, is it a valuable company? And number three, is it trading? Um, is it trading as an undervalue or overvalue at the time you're going to think about jumping into a long-term investment with a company? You can see here we're looking at Alphabet, Google, and you can see the time period. It's just a clean chart of candles going up and down, and we're looking at it right now at $179 a share. So now we'll go over to, and we're going to turn on a couple of indicators here, the Greer value indicators. And one also additional indicator from a third party, Lux Algo, which I'm a big fan of. Um, And so you can see here, looking at this, we don't know, is it a good time to buy or is it in a bull market? Is it in a bear market? What is it? So we installed the Greer BuyZone tool. Let's turn that on. Boom, right away we can see, hey, Google's in a buy zone. So it's a good time to start to accumulate it. It was in the buy zone back here, back here. So as you can see, right off the bat, turning on the Greer BuyZone, immediately we can see Google is in a good time to buy. Next thing we're going to look at is we're going to look at what is the value of this company. Boom, we turn it on, and as we can see, it's got a Greer value of 91%. You can see up here, 91%, which is great. Um, and how that, I'm going to talk a little bit about that Greer value, but you can see right away, it's in the buy zone. It's a gold. It's a very strong company and for this time period. And if we go and we turn on the table here, and I'll show you some of the details of how I determined that it's actually Greer value 91. So I have included a exponential weight. That's the one that defaults to. You can do a unweighted version or you can do a linear weighted version. I'm a fan of the exponential weighted version of the Greer value. As you can see, it's a zero point 0.6 is the default. And we can see over these 11 years of reporting, 10 times the book value increased. And the exponential weighted means that it takes more value of the recent data, the recent financial data has more value exponentially at a zero point 0.6 ratio versus the year before, the year before, the year before, and so on, goes lower and lower. So as you can see, book value has increased. Its current book value is 26. Free cash flow is at 82. Its current value is 72 billion. Their margins are fantastic. They've also increased their 26, 28% margins. The revenues is up 349. Net income 100 billion. And then the diluted shares outstanding, meaning that they're less shares, they're buying back their shares or there's less shares on the market. So that gives you more value of that stock. So if you add them all up, all six of these are in the green, so that makes it a gold value, a Greer gold value. So with all that said, you can see that using that along with the Greer buy zone, we can see that it's in the buy zone. It's got a great Greer value. And then the last thing is the yield dashboards to say, is it undervalued right now or overvalued? So we'll turn that on. And as we can see, actually, if we could have went back in time a little bit, back in 2023, we would have had a really good time to buy into Google because the actual Greer Value Yields Dashboard is at its heights, which is a 4. Right now, it's at a 2, which is still very good, meaning that two of the indicators are actually showing that it's undervalued. And if we turn on that dashboard, the tables, you can see the details there. And so the two values are the earnings per share is actually at a 4%. The average is 3, so it's greater. So that means that it's undervalued from an earnings per share perspective, and a revenue per share also it's at 35. This is the free cash flow yield. The average is 329. It's under that, and the book value is actually 19 percent, and it's under that as well. But still, this shows you that of the four, two of the indicators show that it's undervalued. So that's a good sign as well. So let's turn that off. And so we can tell you, I can tell you right now that looking at this, using these Greer toolkit, the buy zone, the value, and the yields, that this would be a good time to start to accumulate some Google, and we will see long term if that pays off. Now, one other thing to be more precise, I turn on this Lux Algo fair value gap, and let me zoom in a little bit here. And you can see when I see these green bars here, that means that it's actually going in an uptrend, that those gaps need to be filled. So if you see all four of these indicators, plus you see these green bars, it means that buying at these periods of time of Alphabet is a good thing long term. Now, if we go back in time a little bit, we look at back here, we can see also back here, the Greer value was not a gold, it was a green, but still it was pretty good. And at this point, only one of the indicators was less than 50%, but it was a 74. We can see that it's in the gold. We wouldn't actually start to buy it until we start to see the green bars, which is right here, and we would have started buying it here. And obviously, we would have made a lot of money holding this long term. So that is a summary of using all of the Greer tools together to determine um, what when is a good time, when a company is undervalued, and whether it's a healthy company or not. And you can go through and start looking at some of these other ones really quick. You can see, Chipotle was a good one, and then, these are all these companies are in the gold right now in the buy zone and in gold. So these are something that you might want to look at, um, and then and so on. So you can see not all companies are in the gold. So let me take an example of one like I don't know. Here's a good one that's not definitely not in the gold. So here's a Walgreens. You can see it's in the red. It's in the buy zone, but it's in the red. So you wouldn't want to, even though it's in the buy zone, you wouldn't want to actually accumulate this one because it's got some financials that they're struggling with right now. And if you want to see the details, you can click on the table here and see that, from an exponentially weighted, the book value is a 26. The free cash flows, they're losing money here. If you can see, it's actually negative. Net margins are down. So right away, you can tell whether or not, just because a company's in the buy zone doesn't necessarily mean that you want to buy it unless it's a healthy company. And in this case, you wouldn't want to actually buy this company. Now, there might be some upside. Some people might make some money trading this, but long term, until they start, their financial indicators start to turn positive, I wouldn't be jumping into this for a long term play. And that is it. I hope this has served you well. Leave comments and leave me some comments and some feedback. I would appreciate it. And hit the like and subscribe button. Thank you very much. Have a good day.